Welcome back, ladies and gentlemen, and we will now move on to our first panel discussion on the day. That's on life insurance. Firstly, I would like to invite on stage our moderator for the session, Ms. Shefali Anand, Markets and Finance Editor, India, The Wall Street Journal. Can we please welcome her with a huge round of applause? And now moving on to our panelists for the session. Firstly, Mr. Sandeep Ghosh, MD and CEO, Bharti AXA Life Insurance. Can we please keep the applause going on? Mr. Girish Kulkarni, MD and CEO, Star Union Daiichi Life Insurance. Dr. P. Nandagopal, MD and CEO, India First Life Insurance. Mr. John Holden, CEO, Canara HSBC OBC Life Insurance. And Mr. Manoj Kumar Jain, CEO and whole-time Director of Shriram Life Insurance. And lastly, Mr. Vilas Kanyal, Senior Vice President and Head, Business Development, Emerging Geographies, Mphasis. A warm welcome to all the panelists and our moderator, and now over to you.
So hi everyone, I'm Shefali Anand. I'm an editor for the Wall Street Journal. I work with a small team which covers markets and finance, Indian financial industry. We write for the US paper, but as well, for those of you who may not know, we have an India edition as well. It's an online only edition. India.wsta.com. I'm delighted to be here to talk with some of the finest brains in life insurance. So we're going to just spend the next hour talking about several topics about the industry, how it moves forward, and then have about 15-20 minutes at the end for Q&A. So please put together your questions before that starts. So I want to start, I know this is a time of great optimism, and everybody across industries is very excited about growth and change. But I do want to start this panel with a tough but important question for insurance, which has been regulation. Last couple of years, that's been a challenge for the industry. There's been a lot of product overhaul, changes in distribution, which has added a cost for insurance companies. John, if you want to talk a little bit about, is this overhaul behind us, or or is this just a fact of life for insurance industry, and how does this compare to sort of a global scenario?
Okay, it's a good place to start. So, is this overhaul behind us? Yes. Is the next overhaul going to happen? Yes. If I look globally, and I was at a meeting last week with some global CEOs, regulatory risk, or the impact of regulatory change is in the top 1, 2, or 3 of everybody's risk map. Whether you're in Hong Kong, China, India, Europe, so it's there for everybody. So I think it is a fact of life. We have had huge overhaul to the product market, so unit-linked traditional products over the last, in 2010 and then 2013. I think that's kind of done now. The regulation is robust, and it ensures and is being designed to ensure fair value for the customer, and that is a trend that is across the whole world. So in a way, India is either leading the way or certainly in the premier division of regulating to ensure fair value for customers. In terms of things like market conduct, again, that's a regulatory priority across the world, and regulators, they talk to each other a lot, and everybody's looking at what do they do in Australia, what's happening in Europe, what are they doing in China, what shall we do? And everybody's looking at everybody else, trying to be the best regulator. So I think we're going to continue to see regulatory change. I think the products is probably behind us. Market conduct, there is some way to go still. And I think that for us as insurers, we should not wait to be told what to do. And if it's the right thing to do, we should go ahead and do it, rather than wait to be told to do the right thing by the regulator. So I'll give you two examples. One is a key features document or key information document which exists in other markets. We adopted it last year and made it mandatory. Regulator is mooting that now. Anti-churning regulations were notified and discussed about a couple of weeks ago. This is something we put in place a couple of years ago, and so forth. So don't wait to be told. If it's the right thing to do, go and do it. And then when the regulator ultimately comes in and mandates it, then it's not news, it's not an impact, because you've already chosen to do the right thing.
Thank you. So it's a fact of life. Industry lives with it. Next question is, how does the industry move forward in this environment, right? What are the focus areas? How do you grow? How do you grow to get new customers, have new products? Girish, do you want to take that on?
Yeah, I think I'll take the point forward from John. I think what lies ahead is do it before you have to types. I think we need to discipline ourselves on areas where we have gone wrong, and we have gone wrong horribly on few points as an industry. There has to be, I mean, see, after 13-14 years, BCG calls it troubled teens, but we are still in search of a ideal business model template for the business. That needs to be evolved. Our biggest challenge, as I keep saying in different seminars, is this vast market. How do I tap it? How do I go to the last pole? So what kind of distribution I should have? What kind of market conduct I should have? Now the regulator is trying to do all those things to improve the market conduct. That will increase our credibility in the market. I think those 4 or 5 basic things which will make customer believe in insurance as a category, and category which provides you a long-term savings benefit and also protection. That is something which needs to be worked on. From the regulatory side, I expect next 3 to 5 years we will keep getting regulatory diktats on few things, and we should be ready for that. Unless we do it we take it upon ourselves, it will keep coming. So it depends on what kind of intelligence we show to correct ourselves quickly, to ensure that customer confidence is gained back.
Sandeep, I know you have something to say on like how the industry can build this trust back.
Yeah. So I'll pick up exactly from where Girish left off. As an industry, historically, speaking for life insurance, we've been very focused on what the government is doing, not doing, what the regulator is saying and doing and not doing, what our distributors and agents want and don't want. Somewhere in this whole sort of approach, one lost sight of the customer. And that's the price that the industry is paying today, that we've been focused on most of the stakeholders more than we've been focused on customers. And I see that sort of phenomenon really changing. And when I look at my own organization, when I talk to my peers in the industry, almost everybody is talking about a heightened sense of customer centricity, a heightened focus on what does the customer actually need, what does the customer actually want. Sometimes the customers say that to you explicitly, sometimes they may or may not be fully aware of their own needs. So how do we as organizations start to build business models which have the customer at the center of everything that we do? There are a number of things that are happening in this area. I think when you start looking at product design, you need to keep the customer, and it shouldn't only be dictated by the regulators. So I'm not saying anything different from what John and Girish said. As a company, you need to design products that are customer friendly, that are simple to understand, that are transparent. World over, this industry has thrived on opacity of products. You look at a bank fixed deposit, everybody pretty much understands how that operates. You look at an insurance policy, everyone pretty much doesn't understand how it operates. So we've got to kind of move in that direction. And then, the other big phenomenon in the industry is the whole phenomenon of digitization. And this is not just about selling term policies online. A lot of people confuse online sales of one particular kind of product with digitization. Digitization is about, really re-engineering every process in the company to give customers a choice of access. Whether it is on the mobile, whether it's on the, tablets, whether it's on PCs, whether it's sales, whether it's servicing, whether it's, after sales, it doesn't matter. Basically, the way customers interact with companies is sort of changing pretty dynamically. And we've only got to look at some of the other industries to see what's happening. So if you ask me what we as an industry really need to move the needle on, it's basically keeping the customer at the center of everything that we do. And I can assure you, if we do that really well, the shareholders will be happy, the government will be happy, regulators will be happy, employees will be happy, everyone will gain. It's just a journey. It's a mindset change, because that's not the way the industry grew in the first decade or so. It was all about top line, market share, market rank. It was never about, real customer satisfaction. And that's again not about, throwing numbers like saying we settle 99% of our claims. I mean, that's the most misleading thing, because if you have 1 million claims and you settle 99%, is that good? Is that bad? So it's about really genuinely doing things with the interest of the customer at the forefront. And I think that's the big thing. And technology and digitization is a means to that end. It's not the end in itself.
Thank you. So that actually brings us to this topic of digitization, which I think is an important theme. And, Vilas from Mphasis has some ideas about, how companies have been doing it, but not, maybe not realizing it to the full potential, right? So I think one of the things Vilas said, that companies have websites, but that's not enough. That's not enough for digitization, which is kind of what Sandeep said. Could you talk a little bit about, what are maybe a couple of mistakes that companies are doing, or what are they missing in reaching the potential here?
Sure. I think Sandeep referred to it. So when you talk about digital disruption, and just take an example, all of us sitting in these rooms, just recount what have been your last 5 purchases. How have you purchased it? I can say in the last 1 month I did 5 purchases, 4 of have been online, 5th had a digital influence. Okay, for buying that I checked on the internet and bought it. So it's a way of life. So it's nothing new. So where is the insurance industry there? We talk about industries such as media, entertainment, buying books online, travel, where digitization is the norm of the day. We didn't have Make My Trip 10 years back. We didn't have Redbus 10 years back. But we didn't have Mantra 10 years back. But we have those e-commerce sites. Where is insurance industries? So I think Sandeep mentioned a very interesting point, is that how can you interact with the customer online? Okay, so I'll introduce a concept of a digital influence, in the sense that in the insurance industry in India, typically 700 crores of business happens online, and I think you are experts here. I'm just looking at some figures from the industry. Out of it, about 250 crores to 300 crores is life insurance purchases. The rest is the PNC industry. But that's only 2%, okay, 2 to 3%. So there's a lot of headroom, okay, for buying policies online. If you look at the Google research, typically, insurance ranks 5th in terms of the criteria of people inquiring online. So people are inquisitive to know about insurance products, but they are not doing transactions online, okay. So the typical suspects are the 1st, 2nd, 3rd, 4th, but insurance is very much there as a 5th search items. So I think as per one of the BCG reports, by 2020, okay, the industry, the online purchases can grow by about 4 to 5 times what they are. And in terms of the premiums, if you look at it on renewals, it is about 1,10,000 to 1,30,000 crores. So I think those numbers will, I'm sure, excite the panel out there. So it's not a channel which we should ignore. I think you should have strategies to really tap that channel. So my question, I think, and I'm putting as a question, is that as an industry, are we equipped to do that, or we are using offline channels to go online? Okay. So it's a combination of both online, offline, which we need to look at. And there's a huge opportunity in the market to look at that. And only one last point here is that it's not only online sales, it's the entire food chain, okay? From having online channel to having, customer advocacy during the life cycle of the customer and post sales. So I think we need to have strategies which kind of embraces the entire value chain from onboarding a customer to serving him throughout the throughout the life cycle. I think that's my perspective of how digital can be a way of life for specifically the life insurance customers. The PNC customers, the PNC industry is slightly ahead because of the products which they have, but a life insurance industry can take a leap of faith in embracing digital technology.
I mean, I think from the conversations I've had with panelists, everybody seems to agree and everybody is working on various things. Dr. Nandagopal, in fact, is working on this very interesting project with ATM network providers on how to use maybe an ATM card as an insurance wallet. Could you talk a little bit about this? What exactly is this project?
Yeah, well, before I actually talk about the kind of things what we are doing, I just would like to respond, on some of the points which our panelists have mentioned. One of the fundamental things which is a problem with the life insurance is that the cost of operations and the cost of distribution is pretty high. And because the cost is pretty high, you will not be in position to tell the customer that this is the cost which you will have to pay for distribution and for operations, and that's why you made the product so complex and add so many layers of opacity which ultimately conceal the real benefits. And this is my personal view, not necessarily my professional view. So the fundamental problem with the life insurance is if somebody is actually comparing the cost to the benefit, and the distribution costs and the operational costs take away most of the first year premiums. And if you find a way of reducing those things without, of course, compromising the stakeholders' value, because shareholders have invested money and they expect a genuine return on that. But if you can find some way, like in various other industries they have found out, to dramatically reduce the cost of operations and the cost of distribution, then I think there is definitely a case for making life insurance as a product pretty attractive in relation to other financial products. So in that, pursuing that particular thought process, we are thinking that, how do we make sure that the distribution costs are reduced? One is to make it online and web portals and all. But if you look at the financial services, the most well-established piece in the financial services is the banking industry. And banking industry, for a period of last 2 decades or so, suddenly went very high-tech compared to what it used to be before. Like nowadays, people do not visit the banks at all, even though it's in a rural area, semi-urban area. They'll go to an ATM and they'll do most of the transactions. And people who are not necessarily very literate, they also transact through the ATMs because it's a very intuitive process there. So in such kind of situations, then we thought that why can't we piggyback on the ATMs and establish an insurance distribution model there, insurance service model there, because it's already an accepted way of doing business. So for that, of course, we've been talking to the NPCI for making sure that the certain kind of modifications are made at the master financial switch, so that the ATM of one bank, if customer goes to another ATM and then tries to withdraw money, there, of course, the same kind of policy values should be displayed and the same kind of service and opportunity should be there, and there should be an opportunity for him to also perhaps do a purchase. So for that, a certain kind of modifications need to be made. At an individual bank level, you can do that with minor modifications, but if you want to do it, it is intra-ATM, what is the interoperability between 2 ATMs of 2 different banks, then you need to do changes in the master financial switch. That is something that in the project which we are now engaged with the NPCI. Thankfully, there's a lot of positive response that is coming up. And once it happens, I would like to say that, the entire policy experience, the customer experience can dramatically change. One of the biggest problems what we have in the life insurance industry is the touch point of the product with the customer life is not very strong. Unlike a banking product, which you carry it in your wallet and then you see it at the logo of the bank and you connect it to the bank every day, the life insurance product does not touch this thing. So, but it's possible for you to really put the same policy values in the card and you can co-brand it if you want. So in case of emergency, maybe it's a health or maybe it's some sort of a personal accident or even death, the single instrument of the card can actually read the entire policy values, can act as a one single point of contact for connecting to the bank, connecting to the insurance company, and withdraw the policy values, maturity, even death claims and all that. So this is something that it can dramatically change, and hopefully there's another way of digitizing the whole industry.
So what you're talking about is a card which will have, like, it will be like an ATM card that I can keep in my wallet. It will have all my insurance information, my premium information, and I can use it in any ATM across the country.
Yes, you can do it in two ways. One is you can use a smart card, otherwise you can use a normal card. Smart card needs to have a chip embedded in there, the cost will be slightly more, but you can use it in normal card also, because if you do, if you made sure that a certain kind of customization happens at the ATM machine itself, then you can read the policy values. Reading the policy values is one aspect of the thing, but it can also send alerts. For example, if you are having enough balance in the bank and you are withdrawing part of the money from that, but on some point you have some other insurance company, suppose you are not paying the premium, the alert can come from the ATM and say that you are withdrawing 10,000 rupees, but 5,000 rupees is premium payable, and if it's not paid, your policy will get lapsed. So why don't you pay it here? And then these are the kind of things which are possible, because ultimately it is a network world. If it is a network world, one machine talking to other machine and trying to alert through various data touch points is a very feasible idea.
Thank you. So Dr. Nanda talked about distribution being a challenge in bank insurance, and Manoj, I know you have some strong thoughts about why this is important for the industry. Could you talk about that?
On the microinsurance?
Bank assurance, yeah.
Bank assurance. No, bank assurance, the open topic is basically the distribution network. The distribution network which is there with the public sector banks is enormous. Close to around 110,000 branches are there, and whatever is done in last 10 years, it's great, but then there is a great potential which is available. If you see the entire insurance industry, the total number of branches of both life and non-life is around 20,000, where the banking industry is having 110,000 branches, and with great work done in last 14 years by the private sectors and a lot of bank assurance partners, only 30 to 40% branches are only selling life insurance, which means was only 40,000 branches are selling life insurance. So a large network of branches, especially the branches which is in the rural part, tier 3, tier 4, tier 5 towns and the rural places, there is a great distribution is already available. If it is allowed for multiple companies, and that's what is a debate and discussion which is happening, either form, I'm not saying that that's overnight the bank should become a broker. No, that's not what we are talking about. But in a phased manner, if it is available, made available to the industry, because the network is already there, it can reach to the people at a much affordable distribution cost, and it will be a win-win to the industry and to the customer. That's what the government is talking about, financial inclusion. If you see, the highest number of policies or the major policies are getting sold in the top 100 towns only. The customer in the rural belt also require insurance, but then nobody want to go in that market because the distribution cost is quite high. If this network is readily available, it can work in a big way, and that can give up another round of growth to the entire industry, which is what is my point on this particular thing.
But as you pointed out, there's a lot of debate on it, and some folks on this panel probably don't support this. Short of that, like Sandeep, could you talk about what are other tools that insurance companies can try to build distribution, right? I mean, a lot of agents have gone out of business in the last couple of years. So what are, you talked about digitization as one way to reach customers. Are there other ways that you can, boost distribution?
Yeah, so I mean, apart from going direct to customer, there are at least 4 or 5 existing models. Bank assurance is one of them, but let's also not forget that some of the companies like Manoj's and mine, which don't have a banking partner, We are not restricted from tying up with, let's say, non-bank finance companies, and they're pretty big in that in Shriram. So, you know, it's one thing. I mean, whether you have open architecture, don't have open architecture, it's obviously debatable, and there are companies on both sides of the spectrum, but we can't stop ourselves from trying to grow the business. So, on things like group credit life, you know, it is group business, it is open architecture, and we at Bharti AXA work with something like 13 or 14 partners through whom we distribute group credit life products, and a lot of these products go into various stratas of towns, bundled typically with a home loan or a personal loan. So that's the group business is you know, that opportunity already exists in the group business. We have, apart from agents, we also have a salaried sales force. Now that again is not a model that can extend to tier 3, tier 4 cities, but salaried sales force is typically something that is there in the top 30, top 40 cities in the country, maybe top 50 cities. About 6 or 7 companies have a salaried sales force, and we do believe that for a certain profile of customers, typically the mass affluent and maybe like the lower end of the HNI spectrum, you do need a relationship manager approach. So that's another channel that is there. So, you know, distribution channels per se, there are plenty of opportunities. I think affiliations and alliances is again something that have not been very successfully exploited in India yet. So when you look at, there are a number of markets in the world, and maybe John has a perspective on that, where insurance companies have tied up with health clubs and marketed products. So you have to get innovative and think out of the box. I mean, certainly we can't sit here and say the only way to grow the business is for bank assurance to become open architecture. That may provide a certain booster to the industry, but we have to think of innovative distribution models, non-bank finance companies, and even possibly affiliations and alliances with companies who principally don't do financial services products, but they have a customer base, they have a certain relationship with the customer, and if we have a way to leverage that, one key prerequisite of that is to have very simple products. The moment you want to use an alternate channel, a truly alternate channel outside of brokers, insurance brokers, outside of banks, you want to partner with a company that's not into financial services. So say, you know, we want to work with a Flipkart or a Myntra. You know, the prerequisite of being able to do that is to have very, very simple products. And if we can demystify life insurance, have simple products, easy over-the-counter issuance, then the opportunity of working with partners to distribute and grow the business who are not in financial services is going to open up. And that's something that we spend some time thinking about. And there are some great examples of that across the world.
Thank you.